Hi everyone and happy Monday. It's your friend Ryan Rolfe with the DSM Sold team at Keller Williams Legacy Group here in Des Moines in central Iowa. And it's Monday once again. That means it's time for a Monday market update. All right, so let's jump in. We are just about at the end of the year, if you can believe that. Coming up, we've got the various holidays that happen around the end of the year in the first part of 2026. So, as you may guess, in week 49 of 52 in 2025, the market's naturally a little bit quieter, which gives buyers and sellers more time to be talking at home about their plans for 2026. And those that are out looking right now, those folks that are negotiating, selling their home, buying a home, those are the folks that have really a deadline that they need to meet to get into that new property. So they are very motivated. Overall, year over year, so again, we're just about at the end of the year, so really year over year means 2025, we have had quite the amount of price reductions. We're just under 20,000 total price reductions by the end of the year, which isn't really normal, and that means that pricing is key. So if you price it right from day one, you're likely to sell quicker, not have to do that price reduction versus chasing the market down. Now, the market hasn't gone down, an extreme amount, but we are more of a stable and even market. Inventory is back and our competition is rising. So we're sitting around the 4,300 to 4,500 homes on the market. That tends to go down as we get towards the end of the year, likely looking at starting 2026 above 4,000, which is, I can't remember where we started last year at, but we're getting close to that 4,000 number. So we are going to start with more inventory 2026 over 2025, and we could see 4,500 to 5,000 homes on the market next year, depending on what happens. And that's something we won't have seen since 2011 or 2012. All that means, though, is more choices for buyers and more competition for sellers. So like we've talked about many times throughout this year, as a buyer, you've got a lot more opportunity to really negotiate on the right home for you, and you don't have to make a split-second decision like you did a few years ago. For sellers, it's all about how are we pricing your home, not only to make sure that it's going to appraise, because that's what we're using pending and sold activity for, but then we're looking at active homes on the market. What are you competing against? Because that's really your competition, and that's how we should be pricing your home, to price it ahead of the market, so you're not somebody that's having to do those price reductions. The market is likely turning a little bit of a corner in 2025. Pending sales and closed sales both suggest that this was our turnaround year from the slowdown of 2023 and 2024. Days on market are still higher than COVID, but they've started to edge down, and closed sales should finish a little bit higher than the last 2 years. So, we're still having a lot of activity in the market. List price versus sales price, these gaps have started to kind of come closer and narrow to one another. So sellers are finally adjusting to reality and realizing that homes that win are the ones that are priced correctly from day one and not after 2 or 3 price reductions. Each time you put your home on the market, or I guess reduce the price rather. So when you go on the market, you really got 3 to 5 days on average to make the biggest impact. So if we're pricing the home right and we're getting the activity early on when the home's on the market, that means that we've priced appropriately and that we're likely going to be moving in the standard time frame of when we're seeing offers, in the 25, 35 days on market range before we're getting and accepting an offer and then making our way to closing. For those that are, if we're pricing too high, then we are chasing the market down, and it does tend to take a little bit longer. Overall, though, with interest rates where they're at, they've been trending down. So we'll likely see high 5s, low 6s, maybe into the mid 5s even going into 2026. And with it being so many years now since the average of 2.5%, 3%, those really, really low interest rates that we all would love but likely aren't coming back, folks have started to be more comfortable with, hey, I'm okay paying a little bit more in interest rate, because I know that's pretty much the standard. We haven't had a whole lot of deviation between the 5 and 7% range in the last couple of years. So for those of you that are looking to buy, don't expect rates to go down drastically. They likely aren't going to go down drastically. What you do have is more negotiating power, and as a seller, you're likely also buying, so you've got negotiating power on both sides of the table. Make sure that your home is standing out against the competition, and one of the things that we can help you do with that is make a plan to make sure that your home is standing out online, but also standing out with price, so that you're getting the top possible dollar to make sure that we're getting you into the next home that you want to be in and getting your home sold in a time frame that you want it to be sold within. So that all said, let's talk about what happened this weekend. We saw 112 new homes come on the market. 79 homes went into pending or under contract status, and 105 homes sold and closed. So there's definitely still activity in the market. We'll likely see those numbers continue to come down a little bit as we get towards the end of the year, right after the first of the year. Moving into 2026, we'll tend to more than likely see the same or better than 2025, although a lot of things can change that. We tend to hit the start of really the spring market in mid-February, so we'll likely start to see more activity the closer that we get to mid to late February, and also based on the weather. All in all, though, 2026 is shaping up to be another great year compared to prior years, and likely a more normal year, maybe with some more activity than what we've seen in 2025, or kind of another market shift in a good direction for both buyers and sellers. We're really seeing that more even market that favors both buyers and sellers right now. So that's may sound scary, and yet it's a benefit to everybody because you are still getting top dollar for your home. Home price appreciation has not really gone down. We're just seeing the list price to sales price versus the list price being very high, the sale price being much lower. Those are coming much closer if we're looking at them on a graph, right? So that's good for you if you're selling. You're still getting the most that you can out of your home, and you're able to shop around a little bit more for the new home. So it's not such a race to buy and sell. It's more of a slowed down, let's be, can't think of the word right now, let's be methodical. There we go, that's one word. Methodical about how we're going about the situation, and what are our goals for selling in order to be able to buy the thing that we want to be able to buy. So if you've got questions on what this might mean for you, if you're thinking about selling a home in 2026, buying a home in 2026, getting into your first rental property in 2026, or any of those things, anything in the real estate space that we can assist you with, or even if we can provide you recommendations if you're maybe thinking about getting your home ready and need a great contractor or a great, you name it. We are here to help. We are here to be a resource, and thank you for watching. Have an amazing week, and we'll see you next week. Thanks, everyone. Bye.